Hello and welcome to the Leaky Bucket podcast. I'm your host, Ian Morgan, and I'm here to make accounting fun and practical. With over 15 years of experience as an accountant and a business owner, I'm excited to share tips and tricks that will help you improve your financial controls and gain the clarity that you need to succeed. So let's plug those financial leaks and take your business to the next level. Stay tuned for some great insights. Hello and welcome to just another episode. This is where we discuss the ins and outs of running a successful business. I am your host, Ian Morgan, and today we're going to be diving into a question that many business owners face, and that should you put a company car through your own company. Now, today we're going to explore the benefits, particularly focusing on commercial vehicles and electric vehicles, to help you make an informed decision. So, first of all, the basics of company cars. So, let's break down what it means to put a car through your company. When you purchase or lease a vehicle through your business, then the company owns that car, right? They're the ones who are receiving the ultimate benefit, yeah? So the lease is for the benefit of the company, or it's directed or charged to the company. If they purchase the vehicle, then the company owns the vehicle, rather than you personally. Now, this setup can offer several benefits, but it is crucial to understand the tax implications and the cost involved, because if you get it wrong, then it can seriously cost you money. Now, first things first, the reason that we are going to focus on commercial vehicles and electric vehicles is because all other vehicles, i.e. normal cars, petrol, diesel, whatever, in most circumstances, that's most circumstances, not all, you are far more beneficial owning them personally and then charging mileage for your business mileage done back to your company and paying you back that way. Okay, so let's move on to commercial vehicles. So commercial vehicles, like things like vans, pickup trucks, obviously it can be lorries and things like that, but in most circumstances you don't want to be buying a lorry. Vans and pickup trucks are the most common. They have to be vehicles which are typically used for transporting goods and equipment, okay? And that's why some of the pickups have been designed, particularly like even double cab pickups, have been designed in the way where the load area is still bigger than the actual people carrying area, right? To meet this criteria. So here's why they might be a good fit for your company. First of all, it's the tax deductions. So commercial vehicles are often eligible for more generous tax deductions. You can usually claim the full purchase price or the full amount of lease payments as a business expense. Okay, so this can reduce your taxable profits, potentially lowering your tax bill. The second key benefit for commercial vehicles is VAT recovery. So if your company is VAT registered, then you can reclaim the VAT on the purchase price or on the lease payments of commercial vehicles, provided that the vehicle is used solely for business purposes. Okay. And then finally, it's that there is no benefit in kind tax. So unlike cars, i.e. those for mainly carrying people, when cars are used for personal or business purposes, then there's a benefit in kind charge on the individual of what that car is made available to. For commercial vehicles, they typically don't attract this type of tax if their use is strictly for business purposes. Now, there are a few bits that allow you to happen with those, such as things like home to place of work, as long as then you're not diverting off and going in and doing other things. That still then counts, okay? You need to speak to your accountant to make sure that you're not going to breach any of those conditions. But assuming that that's the case, then this makes this a really cost-effective option if you need to have a vehicle purely or mainly for work purposes. Now we need to move on to electric vehicles, and obviously their massive rise in popularity. Now, they've been gaining popularity for a number of reasons, right? Then obviously there is like um, there's like the benefit to sort of the environment. So there's the environmental side of that. But actually, I think that most of the rise, particularly in the UK, in the popularity of electric vehicles, is because of the tax benefits available. So let's just go through and have a look exactly what they are for you as an owner of limited company. So first of all, there's lower benefit in kind tax rates. So earlier on, I mentioned that commercial vehicles don't have this attraction to benefit in kind tax, whereas cars, like petrol cars and diesel cars, they do, right? Electric vehicles used to work similarly, so there used to be no charge. Now there are starting to be charges, but they are significantly lower benefit in kind tax rates compared to traditional petrol or diesel cars. And let me be clear here, actually, right? When I'm talking about electric vehicles, I'm not talking hybrid. Okay, hybrid doesn't count as electric vehicle. They can't count as a petrol vehicle. Okay, so hybrids do not count. This has to be purely 100% electric. Now, the reason that those benefit in kind tax rates are lower is because the government wants to incentivize the use of low emission vehicles. Obviously, we know about low emission zones and ultra low emission zones, and they're coming in more cities and so on. Okay, this is another way of the government getting more people to be using electric vehicles. The next is that there's government grants. So the UK government offers grants for electric vehicles. They can reduce the upfront cost of purchasing an EV. Additionally, there's also grants available for installing EV charging points at your business premises. So do check what the current ones are. Grants move a lot quicker than what taxes do. So do check what is currently available for you and in your area. We've also then got enhanced capital allowances. So electric vehicles qualify for 100% first year capital allowances. What this means is that you can deduct the entire cost of the vehicle from your profits in the year of purchase. Okay, so that's only if you buy the vehicle like either outright or you buy it using like a loan or like HP finance or something like that, where you actually gain ownership of the vehicle. You've just got a loan that's maybe secured against it, maybe not. If you do that, let's say you make £100,000, you buy a vehicle for £50,000, you're now only being taxed on 50,000, not the full 100,000. Okay, so it can be really, really attractive. And when you compare that back to petrol and diesel cars, the rates are really, really low, like sub 10%. Okay, so enhanced capital allowances on electric vehicles is a key benefit. Then there's reduced running costs, right? EVs have much, much lower running costs due to the much cheaper rates of electricity compared to like fuel. Okay, they've also got much, much lower maintenance costs too. Now, we've done this, right? We've switched from petrol vehicles to electric vehicles, and our running costs of those vehicles have come down to about 1/10 ish of what they were previously. Now, we did have cars that weren't overly fuel efficient. Okay, so don't necessarily expect your savings to be that. I think the average is like you halve it. But certainly, we've gone from high hundreds of pounds to under £100 per month in order to charge a vehicle. Now, that often involves there's some like very specific EV electricity tariffs that you can get. Some of them like really clever, and they charge the vehicle at the right time, usually overnight, and that keeps the costs to like 7p, I think, roughly per kilowatt. Obviously, that's going to change, but compared to like going out and charging at like public charges at 40p through to about £1 per kilowatt, it's massively, massively different. There's also then the positive environmental impact. Okay, so let's not forget that using electric vehicles can enhance your company's green credentials, which is becoming increasingly more important, particularly like with clients and sometimes with staff as well. Okay, so there are some key things, however, that you've got to consider before you make a decision. So before you decide to put a company car through your business, consider the following. What is the personal use and the tax implication? If you, or even like if you're using this for like employees as well, use the vehicle for personal journeys, then this could lead to a benefit in kind tax charge, which might reduce the overall tax efficiency. Now, this is particularly key if you are a business and you operate from home. You don't have like set offices or set premises for the business. Actually, the definition of this is having it available for personal use. If your business is from home and your car is at home, it's technically available for personal use. Okay, so do just watch out for that. Trying to claim their pool cars generally just doesn't work. Okay. Then there's the cost versus the benefit. You need to analyze whether the tax savings outweigh the costs of owning or leasing the vehicle through your company. Sometimes a personal purchase with mileage allowance can be more cost effective. Now, this can be that sometimes there's more offers available for people to own vehicles personally than there are through businesses. Sometimes the rates can be lower. So you do need to look at that and just see what current offers are around and what does that look like. And then you do need to just weigh up and have a look at that. But in a lot of cases, currently, although the benefit in kind tax rate is going up, then it's mostly more efficient and more tax efficient in a way to be having the vehicle owned within the company. And then also you need to consider the needs of the business, right? What type of vehicle best suits the needs of the business? A conversional vehicle, right, might be a good tax efficient acquisition, but is it needed? Like, is it the right thing? Certainly for like a tradesperson, that could be a real clever decision to be having a commercial vehicle, obviously. But could it be that you've got like, you know, salespeople or out on client facing roles, or even you're going out and you're meeting clients? Is a commercial type vehicle, like a trades type vehicle, is that going to give off the right impression? Or could like a sleek looking electric car be a better option? So to wrap up, putting a company car through your business can offer substantial benefits, especially if you are choosing a commercial or electric vehicle. And I'd argue only if you're choosing those. The tax advantages, the cost savings, the environmental benefits all make these options worth considering. However, it is essential to weigh these benefits against the potential costs and tax implications to determine what is best for you and your business. That's it for today's episode. I really do hope that this makes a decision for you a much more informed decision about whether getting a company car is the right move for you and your business. If you've got any questions or topics that you'd like to cover, like us or me to cover in future episodes, then do feel free to reach out for me. Thanks for tuning in, and until next time, keep driving your business forward. Thanks so much for taking the time to join us for this episode today. We will continue to bring you great tips and tricks in future episodes. But if you can't wait until then you can always head over to our Facebook group and join the conversation with fellow business owners and entrepreneurs. Just search Accounting Tips and Tricks on Facebook or check out the show notes. Until next time.